Hello and welcome to August's edition of RJ Sanderson TV. Interest rates on hold for the second month in a row, and there's plenty to unpack as we get into the show. Roy Sanderson next to me as always. Welcome, Roy. A couple of periods of relief for borrowers and for mortgage holders.
Yes, Dave, and we're very pleased that the Reserve Bank did not increase interest rates because that is affecting a lot of people out there who are hurting.
Before we have a look at that interest rate, what's the general mood in the community like with the people that you're speaking to at the moment, Roy?
Not a lot of confidence right at the moment for consumers. They're down a little bit, still concerned about inflation, still concerned about interest rates and what the future holds. So yeah, a few worries out there. And some people who have gone through these interest rate rises over the last 12 months or so are really hurting, and further interest rate rises would be diabolical.
That's the anecdotal evidence. Let's have a look at the statistical evidence as we get into our economic indicators for August. And we start the show where everyone's attention seems to be focused at the moment, which is interest rates. As we mentioned, the Reserve Bank putting interest rates on hold again during their August meeting. It's at 4.1%. And it defies the market expectation, Roy, that there would be another 25 basis point rise.
And I think all the banks are predicting one more rate rise. I'm hoping and expecting that there will not be another rate rise. So I'm going out on my own and I'm saying this is it. They're going to stay stagnant for a while.
So the next time the Reserve Bank do shift the interest rate up or down, you think it's going to be down? This is the peak?
I do. I think this is the peak, but I don't think it's going to come down for quite some time. We could be looking 8 to 12 months away before it comes down.
Interesting you say that because it leads us into the inflation rate, Roy, which is wholly linked to that interest rate, and probably good reason, as you say, why that downward change in interest rates won't come anytime soon, because that inflation rate is still at 6%. It's trending down. You can see 7.8% there in January, down to 6% in July. It's trending down, but it's still well outside of the 2 to 3% framework that the Reserve Bank is looking towards, or their target framework that they're looking towards. A couple of questions for you. Is it at what rate do you think we can start to put interest rates down, Roy? And is 2 to 3% unmanageable now that we've got such strong employment and a really low unemployment number?
I think the target should be reconsidered by the Reserve Bank, and maybe that should be 3 to 4%. And I don't think interest rates will start coming down until we are just under the 4% mark, because they need to have a soft landing with the economy, not a crash landing like they had in New Zealand where they went into recession. So I think reassess the target rate would be my recommendation to the Reserve Bank.
Growth numbers, as you say, flatlining here, but no recession as yet. And one indicator that may look towards the growth number is retail sales month on month. And Roy, we saw a pretty sharp contraction there, a 0.8% downward movement in retail sales month on month. Now, some of the indicators that drove this number down was that department stores were down 5% versus 0.7% in May. So people are not shopping as much, and that sort of talks to your point about continued pressure in the current landscape for borrowers and for mortgage holders and for people in general.
And right now we're into tax season. As accountants, we're doing lots of tax returns, and we know the tax refunds are lower than last year by quite a fair amount too on some of them, because we don't have the 1,500 low middle income tax offset. And because of that, there's less money in the community for this time of the year. So I'm expecting the retail sales to continue to drop over the next couple of months.
That's an interesting one. I'm sure you've had some fun conversations on that front when people not getting the refund that they wanted. Consumer confidence is another number that we look at on this show. It's flat, 81 on the chart there, and this chart makes it actually look probably better than it is. You know, Roy, we've had 12 months of really unseasonably poor consumer confidence. So that graph has kind of shrunk to the last 12 months, but 81 is not good. We're talking, near historical low levels. And despite the fact that we've had two periods of interest rate stability, it's still at 81 and it's still declined month on month.
So it's interesting I wonder what the consumers are thinking that causes them to have such a low expectation. And it may be inflation, it may be we're not at the end of the interest rates increasing cycle, that might be the thought processes. But it's hard to know exactly what might turn that around. But if the Reserve Bank do come out and say no more interest rate rises because inflation has come down, I think we'll see that number spike a little bit. That's what we're looking for, that's what we hope.
Business confidence is up since last month, Roy, but again, we're sort of in pretty flat conditions here. Profitability has been something that businesses think is still possible, so it's a high indicator. They think that sales are steady despite what we saw with retail sales. And again, some of these numbers are sort of hovering around the flat line, so business confidence only marginally up. But one thing I do want to show you, Roy, is this next graph, the Australia AI Group Industry Index. Now have a look at this, Roy. This index measures the changes in activity in Australia's industrial sectors. So it effectively shows whether industrial activity has expanded, remained stable or contracted. And I can tell you, Roy, that this particular index has now experienced its 15 consecutive month of contraction. So the industrial sector is contracting at a fast rate, and that is consistent with some of the narrative that we're hearing out of the mainstream media about builders, looking towards insolvency and financial issues. We've seen housing, shortages, etc., and building shortages because of not enough supply, etc. So I think that's really alarming, that index falling for a 15th consecutive month.
I agree, and given the definition of the industry, what's in that index, given it's builders, construction, manufacturing, they're all things that if we have been declining for so many months, that's a real concern going forward.
Just unpacking that index slightly more, and you mentioned some of those industries. Manufacturing is experiencing a deep downturn. Even minerals and metals, a downturn, and as you mentioned, construction, a sharp downturn during that last month, down 19.8 points. So it's a really difficult one, particularly with those industries where there's a high cost of borrowing now. Capital expenditure is probably on the back burner there, and we're seeing that contraction. So very much a watch this space, because if those industries start to dry up, as we talked about on the show last month with economic complexity, Australia doesn't have too many other industries. We don't really have the tech industry to fall back on. We don't necessarily have the strength of the services industry to fall back on. So it's deeply concerning if those indexes don't start to turn around in the short-term future. Roy, let's change pace and have a look at some of the stock market graphs. You want to talk about banks today, and it's timely because we've seen the banks in the headlines over the last few days.
Yes, I wanted to focus for this month on the banking sector. Now, this is not financial planning advice. You should seek your own advice from people. But have a look at this graph. I just want to show you and make some comment. 12-month graph for CBA started the year at about just over 100. It's finished at just over 100. So pretty flat, up and down throughout the year, but pretty flat for the year. So Westpac, very similar. Started at 22, finished at 22, pretty flat for the year. See the number in the phone number there for RJS Wealth Management. Don't go out and buy all these shares because of what I'm about to say. Get some advice from wealth managers. NAB, similar, down a couple of dollars over the last 12 months. Very interesting. So very flat, negative, and ANZ's been the standout. It's up, but still only a couple of dollars. So my message here is that the banking sector has been very flat for the last 12 months, and now might be a time to consider increasing your exposure in the banking area. We've just recently seen the CBA announce a profit of over $10 billion. Now that's either magnificent or it's obscene, because it's a huge figure. And I'm going to use this forum to put an idea out there that I believe the government should have a super profits tax. We know the CBA and all those listed on the stock exchange pay tax at 30%, but maybe we could change it or tweak it. You pay 30% on the first billion, and for anything above that, you pay 40%. We get an extra 10% in taxes, and we start to congratulate people or industries like the banks, like CBA, and say, well, you're contributing a lot more to our tax dollars, and that will help balance a budget. It doesn't have to be permanent. Bring it in for 3 or 4 years, maybe 5 years, help balance the budget. I call it a super profits tax.
And I think there's international precedent on that, and you look to some of the Scandinavian countries, you can see the success of that. And I know people will disagree, but I'm with you, Roy. I think that that makes a lot of sense. Let's have a look at property and prices now. Quarterly change in values. Some interesting movement there, inverse movement, particularly in Victoria, Roy, between capitals and regional.
Yeah, we often get asked in our business when we're doing tax returns, a lot of clients who have investment properties, and they say, should I buy another one? Should I sell? What's the right time? Are prices going up? So this gives us the last quarter. Victoria, a couple of percent up, but in regional, it's down. Probably because in COVID, there was a flood to regional and a lot of demand, and that has just backed off a little bit. More people are coming back to the city, and Sydney has been a standout. Over 3 months, 4% increase. So I just thought I'd share that because prices for property are increasing slowly. Not stupidly, but 2% in Victoria, Melbourne, I should say, over the last 3 months isn't too bad.
Yeah, and I think we've seen now 5 months of continued price increase in the property sector across the 5 capital city aggregates. So some encouraging signs for the property market and for property investors. In the rental market, particularly if you are an investor, there's been some gains there as well.
Yeah.
That you're going to talk to now.
Yeah, so across Australia, the average is 9.4% on that graph. But at the bottom of on the left-hand side, you've got Melbourne and Sydney, 12.9% and 12.4% growth over the last 12 months. So we can see that rents are definitely going up. We have properties in Melbourne that were vacant, and people were dropping rents just to get tenants because we had low immigration. So right now, there is no doubt that rents are going up. We're feeling it and we're seeing it, and that statistic just proves that that is the case.
Well, Roy, I'm going to take this moment to throw to you for one of my favourite segments on this show. It's called Roy's Rage, and it's every month on this show, there's something that you find yourself a little bit frustrated about. You like to come off the long run. What is grinding your gears this month, Roy?
Well, it does frustrate me a little bit because we hear politicians talking about putting rental caps on rental properties so that you can't increase over a period of time. But if there's a rental shortage, that means that rents are increasing. So that's just simple economics. We know there's additional demand because of immigration, and investors are leaving the market. We know we need more rental investors. So stop this talk about putting a cap on rent increases, because it's not reasonable to put a cap on the income when you're not putting a cap on the expenses, which includes council rates, interest rates, compliance costs, land tax. Property investors have to pay more money. Rents are going to have to go up. Bring back the depreciation benefits that the government abandoned back in 2017. We need more property investors so there's more properties to rent. Supply and demand is what we have to fix. So that's my message. Stop talking about rental caps. It's not reasonable. It's not sensible to have a rental cap for property investors.
Bang. Roy goes bang. It's been an ongoing topic here, and it's an ongoing topic in Parliament. I know that there is certainly plenty of stubbornness going on at the moment, and there needs to be some resolution on that front, as you say, Roy, to solve the supply shortage, which we've also spoken about on this show at length in the past. Another thing we talk about on this show, Roy, is tax, because that is your area of absolute expertise. And we've got a few questions for you today, Roy. I've got 4 viewer questions that I want to put to you. And I know that sometimes there's, at this time of the year, there's probably some random situations and bizarre situations. So we've tried to find the quirkiest, the most abstract, The strangest ones that we could come up with for this month, and we'll keep doing that on the show, starting with this one, Roy, which talks to travel. I am going on a holiday, which is for 10 days. While I'm on holidays, I've scheduled some work meetings on one of those days. Can I claim a portion of the holiday as a tax deduction?
Unfortunately, no. You cannot claim a portion of your accommodation or your airfare because the predominant reason was holiday. So that's not possible to claim a portion of those. But while you're having those meetings, if you have to pay a taxi or you've got to drive, you can claim some kilometres. There might be a room hire, there might be a telephone call. Those incidental items or specific to your meeting, we can claim those.
Okay, I'm just going to drill down onto that a little bit more, Roy. Okay, so say you get to a point where you're going to go to, as an example, Southeast Asia on a holiday. You're going to go to Bali or you're going to go to Thailand, and it's the meeting that helps guide that location. Does that change the answer on that, or is that still the same answer?
It's got to be the predominant reason for the trip.
Okay.
And therefore, in your amended example or question, it may be that we can proportion some of the airfare and some of the accommodation if there's a certain number of days that you're at a conference or a meeting or meetings. Like, it wouldn't be necessarily one day, it's probably going to be more than that. And you need to be able to prove to the tax office that significant purpose was work, not pleasure.
Interesting. Okay, I'm sure you get some interesting rationales on that. Next question, the next viewer question. I have been asked to travel overseas for work and I need to pay for a passport. Is the cost of getting a passport for work tax deductible, Roy?
You would normally think yes, because they've been told to get that that passport for work. But the answer is no, because the tax office have issued a ruling that says travel's a personal right and it's considered personal rather than business, even though in that question, specifically the person had to get a passport because of work. The passport is still held for a number of years and it's a personal right to travel.
These sort of ATO veto calls, I've been reading about them myself, Roy, because golf memberships, I believe, falls on that list, even if you are entertaining clients. So is that how it works? There's just a few defined scenarios that the ATO has made a captain's call on?
I will say there's more than a few, Dave.
Yeah.
There's volumes and volumes of examples to try and guide taxpayers on what they can claim and can't claim. So we're not reinventing the wheel here. We are not the first people to think that we might claim our golf membership or our visa or our passports. Others have thought about it and the tax office have addressed it, answered the question, so we as accountants get to know what the answers are.
Speaking of visas, the next question that's going to appear, I have paid for a working visa to travel overseas and work. The cost of the visa is directly related to earning an income. Is the cost of getting a visa for work a tax deduction?
Now, this is an interesting one because I would argue, common sense, it is directly related to work, so it should be a tax deduction. But the tax office have issued a ruling that says a visa application cost is private in nature, so we can't claim it.
There you go. And I think we've got one final question for you, Roy, and this is a little bit different to the others. I pay for Twitter, the X membership, $19 per month. Is the cost of Twitter or X a tax deduction?
So, social media is not a tax deduction. That's the default approach at the tax office, so no tax deduction. But the exception to that might be somebody who's a blogger or an influencer who is getting paid for their posts on social media. So that sort of person is in business, so they get to claim Twitter or any social media as a tax deduction. But Dave, you and I, who have next to no followers, we don't get to claim Twitter as a tax deduction.
I was just going to say the opposite. I've heard that you're building quite the following on TikTok, Roy, and that perhaps you might be able to claim that as an influencer in time to come as we continue to build audience here on RJ Sanderson TV. Hey, that's just about all we've got time for this month, Roy, but before we go, we've always got a shout out. Who's the shout out for this time?
I want to give a shout out to a fantastic business and a great human called Chris Ott Photography. He does commercial architectural photography, town planning, VCAT photography. His website's great, have a look at it, but see through the everyday visual interruptions and highlight the message of the subject. Great person, good photographer, If you're looking for something in that area, mate, he's a legend and great at his job. So look him up. The details are on the slide there.
Fantastic. Chris Ott Photography. Roy, the fabled soft landing, its runway is narrowing as we continue to go down this path. What are we going to be talking about on next month's show, do you think?
Dave, we're going to be here saying it's a third month in a row the Reserve Bank have kept interest rates on hold, and we're going to be looking at spending has decreased a little bit and inflation has just come down a little bit more, and we're going to see consumer confidence going up a little bit because business confidence did go up a little bit, and that always leads to consumer confidence. So I'm predicting next month's going to be the best of the year.
Geez, I think you are right. I think that's a very strong prediction, and you're sort of suggesting that we're inching towards a recovery and that maybe that soft landing may eventuate. Roy, thanks so much for your time today. RJ Sanderson TV.
Thanks, Dave.
Thanks to everyone for watching. We'll see you again in September.